Wonderful good day, ladies and gentlemen. Commodity TV here in our studios in Munich today. And with me here is Mark Learmonth, the CFO of Caledonia Mining. And he wants to give us an update onto his terrific company. Mark, thank you very much for taking the time. Good morning. Caledonia Mining, you did very well. Beside a bit of the production, I would say, production was a bit lower. Can you give us a bit of an update on the last 6 months, please?
Yeah, well, as you point out, production in 2014 was less than we'd expected. So over the course of 2014, recognising we weren't achieving what we hoped to achieve, we set out a revised investment plan towards the end of 2014. And now we're absolutely focused on delivering that plan. So we're spending $70 million over the next 5 years.
Out of your own cash?
Out of cash flow. We're not raising any debt, we're not raising any equity. So $70 million spent over the next 5 years. And we're taking production from about 42,000 ounces up to about 80,000 ounces by 2022. Significantly, we've got a couple of specific milestones which we've set for ourselves. And we announced this morning that we achieved the first one of those milestones. So we completed a sort of circular tramming loop, 750 metres below surface, which just allows us, it's a small step, but it's a very important step in the right direction. It allows us to move more material underground.
Which brings costs down?
Well, it doesn't really bring the cost down, but it means we can move more material, we can do more development, and it's a stepping stone on the way to increasing production. But I think critically, what it's showing is that we say we're doing things, and we actually achieve them. And we're very transparent now with the market in terms of where we are on our various projects. So that tramming loop we announced this morning has been completed. Then in terms of increasing production, the first step towards increasing production is a subvertical shaft, which we're sinking from 750 metres down to just over 900 metres. That shaft was finished last week, and now we started equipping the shaft, and then we'll do horizontal development. So we expect to see production coming out of that shaft in January next year, which was then when we start to see incremental production, increased cash generation, lower costs, and clearly then higher profit and the ability to consider whether we start to consider increasing the dividend.
I like to hear that, of course. But before we talk about the financials, what do you expect for this year production, and what do you think it might be next year?
This year we're looking at about the same as last year. So this year we're looking at about 42. We do expect
42,000 ounces.
42,000 ounces. So we did just under 10,000 ounces in the first quarter. Second quarter we'll perhaps do 10.5, 11. And so the production is going to increase as the year progresses. So the exit rate may be about 12,000 ounces a quarter. The next year we'll be doing about 50,000 ounces.
Okay, great.
Now it's very important that because the fixed cost base is so high, as we increase production, our overall average cost does come down quite quickly, which further boosts the cash generation. Okay.
With what have you projected your all-in costs for this year, and what do you think you can bring it down next year?
This year we're looking at all-in costs of the mid-900s. By 2018 we expect the all-in cost to be below 750.
Wow! So that means even at $1,200 you're very profitable, and that's
what
you
making money.
Exactly, and that's what you said. You already pay a nice dividend. It's 1.5 cents per quarter. That gives at current share price roughly 6% yield, right?
Yeah, we pay a quarterly dividend, 1.5 Canadian cents a quarter, 6 cents for the year. The share price has moved up quite significantly in the last 4 weeks. It's gone up from about 80 Canadian cents to $1, and that's really reflecting, I think, investors' increasing comfort about the trajectory for Zimbabwe. There has been a sort of beginnings of a rehabilitation in the way that the West interacts with Zimbabwe. I think the investors are becoming more comfortable with our ability to deliver, and so the press release we put out this morning, I think adds sort of traction to that. And as we grow production over the course of the next sort of 4 or 5 years and increase the profit, increase the cash generation, we do see scope for a very significant move in the share price. So just because the share price has been quite strong in the past 4 weeks, that's by no means the end of the story. We're still in the foothills of where I think we can end up.
Yeah, definitely. If we do a little bit mathematics, I would say if we calculate something like $300-400 per ounce, at least as profit, even at current prices, then and you will do something like let's say plus 50,000, for example, you have an easy $20 million profit per annum.
Twice that, I expect.
Yeah, exactly.
So I mean, if you look at some of the market projections for 2017, we're looking at a profit after tax of about $45 billion.
Yeah, so that gives, of course, room for share buyback and dividend increases, and or acquisitions, maybe.
And or acquisitions, but let's be clear, we're not in the business of growing the business to grow the business. Okay? We don't want to buy and start producing ounces that don't make money. We're in this business to make money. and say, if
I like
we
that.
find the right opportunities, we want to have the flexibility to do them. But first of all, for the next 18 months, we have to be focused on delivering this growth. If we don't deliver this growth, we don't have the cash to play with. So that's absolutely the focus of the business right now.
Perfect. That's a great final sentence. Thank you very much. I'm very confident that you will deliver, as you have delivered so far, and you do the right steps. And look forward to the future updates then.
Good. Thank you very much.
Thank you very much. Ladies and gentlemen, you heard it. That was Mike Learmonth, the CFO of Caledonia Mining. Well, they are full on track. The tramming loop tunnels have matched together last night. And now they are ready to install. And from the January 2016 onwards, they are through that also in the position to increase then the production further on. And the company makes already a lot of money, pays a 6% dividend, I think in times of 0% interest world. This is a very nice yield to have, and as Mark mentioned, Zimbabwe is getting better and better in the recognition of the investors, of the international, I would say, investor awareness, and so it's getting quite positive, and there's lots of room for the company to grow and to move further, and of course so for the share price. Thanks for watching us. Bye bye from Munich.